Susan and Jennifer, are you both there? And Jim?
Yep, I'm here.
Here, Wayne. This is Susan.
Yes.
Hey, Susan.
Jennifer's
okay,
here.
Good. All right. Well, I think I'm going to go ahead and at least get started. So I guess the others can join as they join. There's a lot joining right now. Do you think I ought to wait a minute, Susan?
I think it's fine to go ahead and get started, Wayne. It's a couple minutes after, so people can roll on in as we're getting started. Okay.
Well, welcome to the webinar, Maximizing and Stabilizing Your RIN Values in a Volatile Market. The webinar is designed to educate you on how to maximize and stabilize the value of your RINs. Before we start, if you'll look on your screen on the right-hand side, you should have a way of entering any questions that you have, and they'll go through to Susan, and she will hold them, and then we'll try to get to them and get them answered at the end of the webinar. So let me start by introducing today's speakers. My name is Wayne Lee. I'm the CEO of Lee Enterprises Consulting, coming to you from beautiful Little Rock, Arkansas, where it's about 62 degrees and bright and sunny. And I will be your narrator today. I'll give you some contact information before we start so that if you have questions after the seminar, you can get a hold of me. My phone number is 501-833-8511. It's 501-833-8511. My email is WLEE52 at lee-enterprises.com. That's WLEE52 at lee-enterprises.com, and our website is www.lee-enterprises.com, and that's how you can always get us through the contact page there. So I will be your narrator, as we're the host of the seminar. I'll be your narrator for today. Our speakers will be from Lexington, Kentucky, Susan Olson, the VP of Analytical Research and Development at Genscape, and from Dallas, Texas, Jennifer LaRoe, the Manager of Biofuels Compliance at Merex. And we have a special guest from Washington, D.C. with us, Attorney Jim Rathall from the law firm of Sullivan & Worcester. They stay abreast of what is transpiring or not transpiring as the days go on in Washington. They stay abreast of Washington, and Jim is going to give us a quick update from Washington as to the things that are happening that affect our industry. Before we begin, I'd like to give everybody a short synopsis of Lee Enterprises, who we are, and what we do. Lee Enterprises is the world's largest alternative and renewable fuels consulting group. We were founded almost 2 decades ago. We have over 45 consultants within the team right now. We have strategic relationships with some of the nation's best in alternative fuels and renewable fuels, and we feel like ours are the top consultants and strategic partners in their field, and that we can assist with almost any aspect of any project. Slide. We feel like that since it appears that many in the biodiesel and ethanol industry seem to be in a consolidation mode as of right now, I would be remiss if I didn't mention that we also own a full-service business brokerage firm that specializes in the buying and selling and evaluating of alternative and renewable fuels plants. We started out purely as a biodiesel consulting firm, which is still a major part of our focus. However, as you will note, we have expanded our consultants and our expertise not only to biodiesel and ethanol, but to virtually all of the other industries in alternative and renewable fuels. As you can see from the industries we serve, there's a lot of them. If you look at the services that we provide, you can see that we provide over 50 different types of services that cover virtually anything from the initial planning and feasibility assessment of a project all the way through project oversight, design, fabrication, installation, startup, and just about everything in between. When folks ask what we do, really there's not much that we don't do. So in addition to our consultants, you'll note also that we have a number of strategic partnerships. These include Genscape and Merex, who will be speaking today, and most of the other top firms in the industry. Many of you will be familiar with some of these as they're household words in the renewables and alternative sector. We work a lot with Brock Beach and Mark McCorkle over at ICM. We work a lot with Nate Vandergren over at ERI. We work with Dave McKinney and Bo Hudson at IMA Insurance, and we work a lot with Nate Burke over at FC Stone. In addition to those that we have listed on our website, there are several that are not on our website. We have two major law firms we use, Sullivan and Worcester, which is who Jim is with, and Stoll Reeves. Kevin Prohaska is our contact there. We also have two accounting firms, Christensen and Associates and I. Bailey, that are strategic partners of ours. And we have relationships with several engineering and fabrication and installation groups. We have, I can't really announce who they are right now, but we have two additional strategic partnerships that are pretty major that we will be announcing in the next 30 days, so please stay tuned for that. The bottom line is that Lee Enterprises has sort of become a one-stop shopping center for all of the alternative fuels needs, so please feel free to call me. If I can't answer your questions or any of our staff can't, we can get you to the right experts. So now that I've given you the Lee Enterprises promo, let's get on to the webinar. We all know that RINs are necessary. We all know that RINs increase your profit margins and generate cash flow. We have all that have been in this business heard about the instances of RIN fraud that have occurred and rocked the industry over the last couple of years. For all of us that are ethical participants in this industry and want to do it right, and we want to be able to maximize our profits in the process. How to do this is the purpose of this seminar. So speaking of maximizing your profits, this is a good time to transition into our first speaker. As I said, Jim Rathall is with the Washington, D.C. office of Sullivan and Worcester, and he is going to give us a regulatory update on Washington. Jim, if you would, tell us a little bit about your firm and give us an update from Washington.
Absolutely. Well, thank you, Wayne. First, I'd just like to acknowledge your work in putting together this webinar and more generally with the ongoing activities of the Lee Enterprises Consulting Group. My colleagues and I at Sullivan & Worcester very much appreciate the opportunity to participate in these kind of discussions and the collaboration that it entails directly with so many members across the industry. Here's a brief introduction to our firm. I'm not going to go through it except to say that we're a full-service firm, and we pride ourselves on doing big firm work, but we also focus on being quite cost-effective and very attuned to the business necessities of our clients. Slide. The next slide is going to describe our energy finance group, and this is an area in which we have quite broad expertise. We focus in particular on renewable energy, solar, wind, and biofuels. And our client base and our work goes across the board from investors to project developers, third parties, and we deal with a full range of issues beyond finance to including regulatory, policy, and legislative work as well. Next. Here are some snapshots. Eli Hinckley in the upper left-hand corner really heads up the energy finance team. He spent a decade or so running the Deloitte & Touche renewable energy group and has a really extensive, deep experience in all the varieties of financing. My background is more oriented around policy, regulatory litigation. Prior to joining Sullivan & Worcester, I served as the majority senior counsel on the U.S. Senate Environment and Public Works Committee from 2007 through 2011. During that time period, the Congress passed the EISA in 2007 and set up RFS2. Pretty exciting times. Eli and I are the two representatives from Sullivan & Worcester with the Lee Enterprises Consulting Group, and you should feel free to contact either of us at any time on issues of interest. Next. Here's some representative clients. You'll see there are a number of large firms, but we also represent many smaller companies from early stage to mid-market. And as I mentioned earlier, we very much pride ourselves on doing very focused and cost-effective work. Next. So moving to the substance, I thought I'd start with a framework slide. I think everybody on this call is well aware of the framework, and I won't go through it. But the overarching point is that when ESA was passed in 2007, some very ambitious goals were set, and it's interesting. It's hard to believe it's been 6 years, but it is a point where we're seeing a sort of a crunch time in terms of the objectives. We had a 21 billion advanced biofuel objective by 2022, and we're well along on the curve, and where we're seeing the sort of collision of the goals of Congress with the realities of the marketplace. And I think that fundamental point is what's driving a lot of what's going on in Washington right now. Of course, the statute, in addition to the goals in the various categories, also created the RINs market mechanism, and that is the main topic today, and we'll get to the details on that later. For some recent developments, in 2013, as many of you know, in August, EPA finally announced its final rule on the 2013 volume obligations. The major event there was in the cellulosic waiver, where from the target of 1.1 billion gallons that had been set under the RFS2 statute, EPA waived that requirement and went all the way down to 6 million gallons, reflecting the market reality. They did hold the line on advanced biofuels and the mandate overall, but that appears to be changing even as we speak. EPA right now is working on the proposed RVOs for 2014. Those have been promised to be coming out any time now since August, but there's been, of course, the government shutdown was a factor, but also, probably more to the point, a lengthy delay at OMB. There's got to be a lot of tough discussions going on. There was a point where there was a leaked draft a little while ago that showed the proposed numbers being lowered significantly, including the conventional biofuel category, the cellulosic, of course, as well as the advanced category being reduced. And there's a lot of speculation and not a little controversy about what EPA is going to do. That will be coming out any time now. The deadline is November 30th, and it's reasonable to think EPA is going to at least try to hit that deadline. The other major event this year, you'll see at the bottom, was the January 31 proposed rule on voluntary RIN certification, and that's going to be discussed in detail by Susan and Jennifer. Next. So on the Hill, it's been really intense lobbying, quite a lot of sort of no holds barred PR and lobbying maneuvers, in particular driven by the American Petroleum Institute efforts to push forward a complete repeal of RFS2. And that's been countered by a lot of work on the other side. In the face of that, I would say swinging the other direction, the executive branch has been quite supportive and very proactive in different ways in shoring up the biofuels effort. In addition to President Obama's Climate Action Plan, which specifically incentivizes biofuels in certain ways, DOD has been a major player and a major driver in using and biofuels. I think it's one of the things that people may not appreciate, that DOD uses 5 billion gallons of fuel a year, and right now, under the current executive branch policies, they're aiming, the Air Force and Navy at least, are aiming for 50% displacement of petroleum by alternative fuels by 2016. They're doing that in lots of ways, including the Defense Production Act Authority, which has been invoked to provide a $500 million program for advanced biofuel support, including at specific plants. So they're doing a lot. And I guess the other headline there was recently President Obama appointed Admiral Dennis McGinn as Assistant Secretary of the Navy. Admiral McGinn has been probably the single leading champion for biofuels in the military. He was previously the president of the American Council on Renewable Energy. We work with ACOR and with Admiral McGinn closely, and no question that he's doing everything he can in his new role as Assistant Secretary to support the effort. Finally, litigation is a major issue. There have been repeated challenges on a yearly basis in the D.C. Circuit. Most recently, this case filed by Monroe Energy, but it's also been joined by API. And what's interesting there is that the D.C. Circuit agreed to set an expedited briefing schedule. That doesn't happen very often. So they're going to have oral arguments early next year, and we could get a decision by mid-2014. And given that level of interest, it's entirely conceivable that they would do something fundamental that might affect the framework. Next slide. Where is the policy heading here in D.C.? Well, we know that ethanol at the 10% level is approaching the blend wall. The proposed increase to E15 is subject to intense criticism, and that sort of collision is in large part driving what's happening at EPA and elsewhere. There certainly could be significant changes coming out of the OMB review. On the Hill, while there will be continued intense lobbying and some very interesting coalitions, as indicated in this slide, it's quite unlikely that there will be any actual repeal or amendment of RFS2 in the near term. In particular, in the Senate, the champions for the current program are not going to be overcome. So really, you'll see a lot of smoke and fire in the Hill, but unlikely to be any result. However, there certainly will be the ongoing litigation, the disputes over RINs, and we've handled directly a number of the RINs disputes, including some litigation, and we can see the impacts firsthand. Hopefully those will settle down with the efforts of Susan and Jennifer's companies and the EPA certification rule. But the headline and the bottom line from Washington is lots of continued uncertainty. There are many pieces in the air, and you know, it's unclear where a lot of things are heading. Finally, the last slide I have, just to circle back to the finance side of it, notwithstanding the uncertainty and the controversy, the statute appears to be working as intended in the bigger picture. There's a lot of capital being pushed towards the biofuels market. We here are seeing new investors coming in and lots of interest from various investor sources. The word from the market, there's a lot more projects even this year than last, and consolidation in the industry. So, you know, it's not all gloom and doom out in the real world, which is good. And hopefully things here in Washington won't be too much in the way. So that's all I have for the report from Washington.
Well, thank you, Jim. I appreciate that very much. Before I move to Jennifer LaRoe, I would ask, Jennifer, do you have any comments or observations you'd like to make? And then I'll ask Susan the same thing with respect to Washington and the regulatory update.
Yeah, thanks, Wayne. You know, Jim, I can't imagine what a tough job it must be for the EPA to try and appease all of the stakeholders that are involved in this ongoing drama that is the RFS. And the whole bureaucratic process takes up such an inordinate amount of time because these are very complex issues and it has to go under so many different reviews before they can actually take action. But what's sad, like your last slide mentioned, is that there is some increased capacity and other activity going on right now. We're seeing a resurgence in the biofuels industry and what was eventually expected, a consolidation within the ethanol and biodiesel arenas where larger companies are picking up shuttered or distressed plants and then infusing them with cash so that they can reopen. And at the very same time, the leaked draft is an indication that there is a possibility that a reduction would occur in the RVOs, and this is when we're seeing recovery from the 2008 recession and the severe drought last year. At the same time as second generation and advanced biofuels gaining some ground and producing real volumes, and then you even have biodiesel, which is forecasted to produce in excess of this year's mandated volume and above and beyond the 2014 volumes without revision. Except for the cellulosic tweets, obviously. But I think that Susan can probably talk a little bit more about some of the reported volumes and trends that she's been seeing.
Susan?
Sure. Well, I think Jennifer did a good job of kind of summarizing, what's going on. I think that, the biofuels industry is strong despite some regulatory uncertainty and adversity. As Jim pointed out, there's a lot of financial influx into the biofuel space. We've seen specifically, several clients come on board that are restarting plants or actually starting new plants and new operations in the biomass-based diesel sector. And then over the last couple of months, there have been reports of at least four ethanol facilities that have either restarted plants or started new operations. So I think that that speaks to a very strong, maturing industry, and I think this was a banner year for biomass-based diesel, and ethanol has produced 14 billion gallons even before the mandate was over 13 billion. So I think that we are seeing a very resilient, strong industry. Thanks, Wayne.
Thanks, Susan. Okay, and I'll add my 2 cents worth in there. I'm not a complete believer that Washington can agree on anything right now, so I remain skeptic till I see the proof in the pudding. But I do see a bright future for alternative fuels. Jennifer, if you would, tell us a little bit. I want to get into the meat of the seminar. Tell us a little bit about Merex, and tell us about the ways that RINs are sold, the methodologies for selling RINs.
Sure. Thanks, Wayne. Merex is headquartered in Dallas, Texas. Oddly enough, it's not quite as warm as it is over there for you in Arkansas, Wayne, but we'll probably give it a couple of days and things will change. That's the way things work around here. But we are actually a leading marketer and distributor of RINs and biofuels, crude, methanol, and other gasoline blend stocks and distillates. Merex is a distributor of ethanol, and we actually represented more than 8% of the domestic ethanol market in 2012. We have a unique niche in export ethanol, so our facilities were able to make it through some difficult times with domestic production issues and demand, and over 25% of the exported volumes from the U.S. in 2011 and 2012 were shipped by Merex. We're a leader in RINs marketing and trading. We've moved over 9 billion RINs without a single compliance issue, and a top 12 private company in DFW for the Dallas Business Journal. Our distribution system is quite vast. We have more than 2,200 rail cars, and we have strong relationships with banks and a few other sources. We have very, very established and long-term relationships with all points in the distribution system, and our success, it just continues to get better with each year in regard to buying and selling ethanol, crude oil, methanol, other distillates and liquid fuel products, RINs, and carbon credits. To recap, here are some of our product lines. We're known for our quality. It has allowed us the decades-long exposure and relationships with pretty much every obligated party in the country. Our customers are the customers of our producer partners, no matter how large or small. We have a number of different suppliers that range in size for each one of our product lines. Our distribution system is expansive with a vast national network and plant network. We're able to span across the globe, as I mentioned. And our storage capacity at Texas City in particular is quite massive at 490,000 barrels. We've been able to utilize that tankage for a number of different products, primarily different grades of ethanol, but prep has been underway for other liquid fuels which are being considered here and also at another terminal that's owned by Merex, which is the Gulf Gateway Terminal down in New Orleans, Louisiana. We're pretty excited about this. It just opened up in the second quarter, and it's a collaborative effort between Merex, LLC, and Bulk Resources. GGT, we call it for short, is a rail-to-barge crude terminal, and it is linked to 7 railroads and has access to 6 major refiners. It's designed to handle a unit train per day, and there's a tank under construction to increase daily capacity. Transport or storage options for other liquid fuels could be weighed in the future. And here's a snapshot of our annual revenues for the past decade. We surpassed $3 billion last year, and we'll generate even more in revenues this year. And the news came out yesterday, and we are number 12 again, per the Dallas Business Journal, of top private companies in the DFW area. So one of the main reasons behind our success and the success of our producer clients is the fact that we view our producers as our partners. Our ultimate goal is to help them succeed and thrive in an ever-changing regulatory and market-driven environment. We'd like to take just a minute to share a few of our our RIN successes with you so you can kind of grasp the experience that we've been able to bring to our producer clients. As we began re-registering all of our ethanol plants with the RFS2 in 2009, we expanded our ethanol netback model to include the advanced RINs that one of our producer partners would be generating, and the facility ended up making about $11 million in incremental revenues in 2010 and 2011. But when the news of RIN fraud started peeking out from the headlines, even as rumors were being passed along before the official news broke, we started conducting our own due diligence efforts, and we became the first marketer to provide a comprehensive due diligence package. We did that to protect ourselves, our producer partners to make sure they were doing everything right, and our downstream customers who the last thing that they wanted was to retire invalid RINs and be issued NOVs, notices of violation. So it was a really long and hard and busy road, but we all believe that it was well worth it when the Merex producers were able to stay alive in the RIN market, and Merex became one of the leading RIN marketers. At this point, we started developing additional alliances in the RIN and compliance arena. The number of interested producers increased, so we developed a relationship with Christensen and Associates to help us with our vetting and due diligence programs. As we moved into 2012, we were identified as a model RIN marketing program with best practices in DC, and we developed our exclusive RIN marketing agreements contingent upon the use of our expanded due diligence program as a minimum requirement. We were also invited to be one of the few stakeholders to join in the QAP conversation with the EPA as they developed their new proposed rule. So now when we're moving into 2013, we reached out to Genscape in the back half of 2012 and finalized our agreement in 2013 after researching a number of potential QAP providers. We realized that we'd be unable to commit the resources required to provide adequate QAP services under the EPA's current proposed rule on any grand scale. So we felt that our producer partners deserved the best. So we sought Genscape out and initiated the onboarding process for all of our suppliers to have them undergo the QAPA certification process. Meanwhile, we expanded on our team service offerings for all of our producers with group rates and services offered through Christensen and Associates, and we welcomed Lee Enterprises into the fold as a strategic partner and a valuable resource for ancillary services. These services are often really hard for our producer clients to pin down on their own. So we've actually, 2013 has been a great year. 2014 is going to be even better for Merex and for its producer partners who, even through all of the fraud and all of the uncertainty, they've remained open. They've been enjoying a wealth of support, and they're still selling their RINs at posted or premium prices. So that brings us to how to maximize and stabilize your RIN values. Most of you are here today because you already know what RINs are, so we're not going to rehash that. But what we are going to talk about is how RINs can be both a burden and a blessing at the same time. If you're a producer, you know that RINs can make you money, and sometimes they're the only thing that's keeping your doors open, your feedstock coming in, and keeping the plant in production. The key is maximizing your RIN values in an increasingly volatile market by weighing your RIN selling alternatives and solutions so that you can determine what sales method works best for you and which ones provide the stable cash flow at the rate you need without costing you a fortune in fees. But first, I'd like to provide a little background, paint a picture, I guess, of how the industry got to where we are today and what the options are currently as a direct result when it comes to selling your RINs. This slide here might, I know it seems kind of funny, but I've actually been asked that on more than a few occasions whenever I get passionate about and start talking about RINs. The number of people who've hung in there through the old days of the RFS1 and the horrible RIN fraud incidents, and the people who kept the integrity of the industry intact with proactive efforts. Some of them have dwindled away over the years, moving on to something less insane, or they've hung in there and they've done what they can for the market and the industry. Hopefully with some of their sanity left intact, but that probably remains to be seen. Anyway, think about what all we've been through together. RINs are gracing the pages of the Wall Street Journal and countless other publications on a weekly basis right now. Large reason for that is that RINs have never been quite as volatile as they are today, not even during the negative fraud incidents in the years past. So under RFS 1, things actually seem to be going great for quite a while, and it's probably because ignorance is bliss. Merex and others had turned a compliance burden into a profit center throughout the entire supply chain. But unfortunately, there were fraudsters, and there were some sellers and players that were not building relationships. They weren't exercising caution as they would with any other product. Instead, they were trading RINs blindly, and it turns out they were trading air. So that brings us to fraud. And it's kind of where our whole story starts and why we are where we're at today. What's unfortunate, the fraud incidents managed to damage an entire industry. Victims of the crimes perpetuated by a few bad apples suffered some very severe damages. And I think Susan will talk a little bit more about that later and how horribly it affected the obligated parties. So after all of that history, I think we're on the wrong slide there. No, I've got it. Sorry. Next slide. So the RFS was crippled for a while. Obligated parties rightfully demanded retribution, a solution to problems surrounding the invalidity of RINs. The EPA started working vehemently on it, as did other stakeholders in the market. At the same time, RIN prices plummeted. Many middle market players were eliminated, largely due to their inability to appropriately vet their new product, known as RINs. Obligated parties had to go out and find various resources by which to vet the RINs that they were planning on using for compliance. Few marketers survived, and most producers are still struggling today. Indeed, very few producers and marketers are actually thriving right now due to the interruption in RIN sales, but they're all coming back up, and there's a reason for that. There are a number of different programs that have been established to try and promote liquidity in the market again. The ones that really made it through without the largest struggles were those with deep pockets, strong partnerships, relationships, and strategic resources like big balance sheets, deep market entrenchment, and then market insight and expertise that allowed the ability to predict the future, because that expertise enabled the people that were depending upon the RIN liquidity to be proactive and not reactive, because by that time it's already too late. Those of us who made it through the storm worked together with the EPA and with all of the industry stakeholders, from supply down to the obligated parties who have to use these RINs to meet the EPA's requirements, to develop proactive solutions to battle the impact of fraudsters and even ignorance and negligence. So that brings us to how RINs are currently sold in today's market by the producers. There are options 1 and 2. 1, you can sell biofuel with RINs attached to end users, not necessarily the obligated parties, but the customers who are using the physical product. A lot of producers do this today with the customers who can and will actually accept the RINs and are registered with the RFS program. Number 2 is an example of another common practice where producers develop a strategy to separate RINs and then sell small volume transactions on the spot market through broker screens to generate cash flow. And then there are options 3 and 4. You can sell your RINs directly to the obligated parties who need to use the RINs for compliance. This works well for some producers. You can do this with RINs that are assigned to the biofuel that you're transferring to them, or you can send them separated RINs without fuel. A large number of the obligated parties prefer to get both of them together if they're getting them straight from the producer. Regardless, these sort of transactions will most often occur under some sort of an agreement, whether it be an offtake agreement or some other form of short or long-term contract. And then finally, you can sell your RINs through an experienced RIN marketer. The goal being to find the best purchase price at all times, not being locked into one flat price at all times. At your disposal in this scenario should be a number of different options regarding cash flow, pricing structure, expanded customer base, and flexible contract terms. And Wayne, I think that's it for me for right now.
Okay. Well, thank you, Jennifer. That tells us then basically what I gleaned in addition to the history is we can sell our RINs with the wet gallons. We can sell our RINs separated and sold in small volumes on the spot market on broker screens. We can sell our RINs via agreement with obligated parties, and we can sell our RINs via RIN marketing. So now I would like to, and we'll discuss those in a little more depth in a minute, but now I'd like to move to Susan. Susan, tell us a little bit about Genscape, but tell us what QAP certification is. What's quality assurance program? How is it recognized by the EPA, et cetera? So Susan Olson, Genscape.
Thanks, Wayne. It's my pleasure, and thanks for having me today on the webinar. So just kind of to segue a little bit from what Jennifer was talking about, the webinar today is the purpose is to try to provide some information to the community that's out there today about stability and value of RINs, and you know, I come into play from Genscape. Basically, we are the most recognized and the most robust QAP provider. We have clients that include 46 obligated parties and institutional investors that trade RINs as well, and more than 35 renewable fuel producers in 3 countries that we're proud to serve with our QAP services and RFS2 compliance services. So, as a company, you know, we are the world's leading provider of real-time monitored information to the energy industry. Our goal as a company is to provide better transparency to markets, thus, you know, providing better business value to those that trade in those markets. In the biofuel space, really the first step for that was to provide a service by which RIN integrity could become more transparent to help bring the liquidity back to the RIN market. So that's part of the reason why we partner with Merex, is because they are the best marketer that's out there for RIN marketing. They basically have you know, provided a lot of really good value to our clients and have been a strategic partner, as well as some of the others that are out there. Obviously, Lee Enterprises is a strategic partner of Genscape and provide a lot of services to our clients. And then Christensen and Associates, and also we've done a lot of work with Progressive Fuels Limited. So let's just get down to it. The purpose of me being here today is to talk about QAP and how that, in conjunction with RIN marketing, can provide more value to RINs. So I split this section up into 3 parts: the what, the why, and the how. So in the what, we'll talk a little bit about the backstory and the fallout and recovery, kind of segueing from what Jennifer was talking about earlier in terms of how we got where we are today and where we are in the process of recovery. We'll talk about the why, what would motivate a producer to get QAP assurance for RINs, and then the how you might get rolling with QAP should you make the decision to go forward. So to continue with what Jennifer was talking about, let's talk a little bit more in detail about the backstory of RIN fraud. So if you remember back to 2011, it was really a banner year for biofuels, and as it was coming to close, the RIN fraud really rocked the industry. So it was November 7th when the notices of violation were issued to obligated parties related to the retirement of fraudulent RINs, and those were the ones that were generated by biodiesel producer Clean Green Fuels. It was not long after that, in early spring, late winter, where Absolute Fuels and Clean Diesel were also indicted with fraud, and then not long after that, word started circulating of e-biofuels being under investigation, and then late this year, in September, not too long ago, actually 6 individuals across 3 companies were indicted for e-biofuels RIN fraud, which Indiana called the largest tax and securities fraud in its state history. So overall, there's been about 140 million RINs that have been generated fraudulently that has cost the industry more than $200 million so far, according to some estimates. there's a lot of detail here. I didn't intend for this to be an eye chart, but it's kind of for reference. And I think one of the most important things to talk about here is that the Department of Justice and the federal court system has taken this fraud very seriously, which I think is a really good thing for the industry, that they are doing that. It's a terrible thing that happened, but to have the federal court system take this seriously, I think kind of makes an example on how seriously the country takes it. So. Rodney Haley, who was from Clean Green Fuels, actually was convicted on June 25th, 2012. Got 12 years in prison and ordered to pay $42 million in restitution. Jeffrey Gunselman from Absolute Fuels was sentenced to 188 months in federal prison on March 29, 2013, and ordered to pay fines and then also about $55 million in restitution. Rivkin from Green Diesel is reportedly still on the lam. There have been reports that artwork has been seized for forfeiture by the Department of Justice. The most recent indictment, there hasn't been any word yet on civil enforcement or criminal trial or enforcement. So usually it takes some time after the indictment happens. So what happened? What was the fallout from all this? As Jennifer said, because a few bad apples spoiled the bunch, what happened is that gaps emerged in pricing between RINs that were generated by producers with smaller balance sheets and fewer counterparty relationships, and those producers with larger balance sheets that already had broad established relationships. So you ended up with the picture there shown on the right-hand side where you had market illiquidity for D4 RINs. There were some producers that basically, could still sell to practically anybody in the market, and then there was a lot of what happened where that advanced fuel producers typically had to be individually cleared by refinery risk management groups before they could sell their RINs that ultimately ended up in the hands of those obligated parties. So, and then there were some that actually, had few or no buyers, and some out of that might have had more buyers than others, but basically it created this illiquidity to the market. The other thing that happened was there was this market tiering, which is typically split up into 3 tiers. So you had a top tier, which is the largest balance sheet producers that have these broad established relationships that Merex had basically had and still has, and Jennifer talked about earlier. So marketers, some very large producers were able to maintain indicative index midpoint pricing for their RINs. Then you had a tier 2 where these producers were accepted by risk management groups. They had some vetting, typically audits and things like that done, or were an early part of the Merex vetting process or the Genscape RIN Integrity Network, and those would typically be, a penny to a nickel off midpoint. And then you had a third tier that really could only sell to select buyers and had a hard time even getting in the line for clearing by risk management groups, and those were taking really deep discounts. Sometimes, most of the time greater than 5 cents, and sometimes up to 25 cents a gallon, just based on what was available on the market for those producers. So the road to recovery effectively was that, industry took action. Genscape met with members of the industry who had created a RIN Integrity Task Force with the goal of standardized integrity. And as a result of that meeting and long discussions with the industry, launched a RIN Integrity Network in June 2012 as an industry standard. The House Energy and Commerce Subcommittee actually held a hearing in July 2012, which prompted the EPA to formalize rules around RIN integrity and offer civil liability relief for those that took advantage of these measures. And so, as most everybody knows, in January 2013, the EPA actually issued a proposed rulemaking for quality assurance plans to standardize RIN integrity procedures for renewable fuels, and also to offer civil liability relief for RIN buyers and marketers and people that hold RINs. So one of the unique things about this rule is that it actually established a bridge period that took hold this year, and it was the first ever of that type of thing that happened with an EPA proposed rule. So just the quick basics, the proposed rule basically proposes a voluntary structure for RIN validation called QAP, Quality Assurance Plans. You'll hear it as QAP or QAP by some people. It leverages, existing third-party solutions like the one that Genscape had created. Obviously Merex had created a program, and that was an early model as well. There are 2 plan types, the QAPA or QAPB. The QAPA requires ongoing monitoring methodology. there's a minimum of a quarterly audit and a site visit by a professional engineer required for QAPB. So QAPA requirements are more stringent due diligence than QAPB. And again, this is all, basically designed to be done by a third party that's independent of these facilities. The benefits, which are the other part of the QAP, so we've talked a little bit about what's required. What the benefits are is that for a QAPA or BRIN, there are basically an affirmative defense is offered, and there's no need to ever replace a QAPA RIN. So both of them get affirmative defense, but with a QAPA RIN, it's basically good and downstream until once it's retired, once it's held, once it's transferred. As long as it's designated a QAP RIN, it's still a good RIN. The only exception to that would be if somebody downstream was actually complicit in making the RIN invalid through some sort of criminal activity. So, essentially, I can talk a little bit to what Genscape has seen about, the QAP process and how that's helped restore liquidity. So we've seen, our client base grow to about 35 renewable fuel producers since the launch. We've seen producers that were seeing this kind of tier 2 discounting are actually getting tier 1 prices for their ARINs. And with Genscape QAP, the other thing is that renewable fuel producers are able to sell RINs to parties that wouldn't have considered buying them before. You actually have gotten, from our client base, we're seeing people approaching them and being very competitive for their RINs and calling on them trying to get their RINs, which is something that was unheard of before they had QAP in place. So even for tier 1 parties that are our clients, they've also found new counterparties by participating in QAP, which effectively has increased the competition for their RINs. So all these are very good economic things for producers and renewable fuel producers that have participated in QAP. So in short, essentially, the motivation for adopting QAP, I like to break down into 3 categories. Number 1 is better pricing, so the economics of it, and we've certainly seen that. And I think that we've seen producers actually that have invested in a QAPA type program getting a penny over midpoint price. One of the other things that has happened is that they get more buyers and longer-term deals for RINs. So QAP opens up doors to strong marketers like Merex and other direct buyers. So what we're seeing is that producers of QAP RINs are securing longer-term deals and leveraging the best pricing compared to without QAP. So, one example of this is there's actually, we had a producer that was able to get a fixed price long-term deal when RINs were over $1 and are still, selling some RINs into the market at that price. So that's really a very beneficial position for a renewable fuel producer to be in. So QAP is increasingly becoming a standard in many counterparty agreements. So that's another one of the 3 big compelling factors is that if it's required by your counterparty, it would be compelling to get on board. And I think the third thing is a sense of urgency. So, you can get out ahead of the curve. After the rule is final in late 2013 or early 2014, there's expected to be a large push for QAP. Our QAP program, and I think there may be some others out there, offer flexibility so that if you don't know if you need a B or an A or what version of that you need, that you can get a flexible program that allows both. So I think in general, a commoditized RIN also opens the door back to liquidity and improved market efficiency. So that's definitely a positive economic factor. So that's really the long and short of the motivation for adopting QAP and our experiences with the market. I think we're running just a bit short here on time, so I'm not going to go into a lot of the details of what to expect from a QAP. I will basically say that there's a baseline type of audit that happens in the beginning with an initial site visit, and to make sure that producer is doing things according to RFS2 best practices, and companies like Genscape will help you get up to that standard if you're not there yet. And then there's the ongoing monitoring phase, which involves receiving data from the client, doing either independent monitoring like Genscape's plans, or doing periodic site visits, and then also comparing that to RIN verification. So Wayne, I'm going to go ahead and then flip this back to you, because I know we've got some other content to cover, and I will, of course, invite anybody on the call that would have any questions, so please feel free to reach out to me, and I can talk more about QAP.
Okay. Thanks, Susan. And we are, like you said, we are running short on time, so we only got about 10 minutes, I think, before our hour's up, and so we may overshoot that by a little bit, so I hope everybody can stay with us. But Jennifer, we've talked about the 4 RIN sale methods. Can you briefly go with me through the pros and cons of each of the 4?
Sure. Thanks again, Wayne. So with the 4 different methods that we touched on earlier for producers to use, the strategy and the methodology, there are different options that will work best depending upon what type of a company you are and what your needs are. Everybody is different. So it's obviously up to you to weigh the different options and determine which ones work best in your particular situation. Concerning option 1 that I mentioned earlier, while it's unfortunate, producers who sell their RINs attached to wet gallons typically get little to no premium or additional value for their RINs. Often it's an easier way to do it if the RINs can be transferred to the parties that they're selling the fuel to, and they're registered under the RFS2 program. And another unfortunate situation, though, is that it effectively eliminates the majority of some of the producers' smaller customers. So then you're going to have to balance the inventory of assigned RINs as compared to your renewable fuel volume under this option, and that can become quite a tricky compliance issue at times. Finally, on that front, I have been told by a few producers who've been approached with exclusive offtake agreements for 100% of their fuel, so long as their RINs are attached, that they would offer an indexed price up to 40% off of the going market rate of OPIS posted prices. Obviously, that's only one scenario, but and it's also an extreme one, but it is one that we've heard of, and we're not sure what the norm is. But some people might see that as locked-in margin and a safe bet, and that's what they would want to go with. Others might see it as an opportunity cost, so it really does depend on your specific needs. When it comes to producers separating their RINs and selling them through brokers under option 2, that's another common practice that's pretty great for generating regular cash flow. And that's when you're selling through the broker screens. It's the previous slide. There you go. So the only thing that I would really caution you on with regard to this approach is that you really must make sure that you're doing it right. The money that you get for your RINs right now to get that cash flow in will not compare to your liability if anything should go wrong. That's one of the things that the QAP helps with. Brokers will often have a list of people for whom they can buy and sell and to whom they can buy and sell depending upon the deal. But unlike a QAP program, they're not able to help you determine whether your methods leading up to the sale resulted in valid RIN generation or separation. As far as cost is concerned, that ranges too. We've heard from some of our producer partners that they have taken in the past up to 15% off of OPIS prices, but this is not, to be fair, a result of the broker fees alone. It includes the fact that some of the smaller producers are forced to sell smaller volumes on the spot market in transactions that don't fetch the premium that larger bulk transactions do when sending them on to the obligated parties. The next option, you got it, is where RINs can actually go directly to the obligated parties from the producers. And this is a good and safe option, too, for producers who are actually able to sell their RINs directly to obligated parties. Some smaller producers' current positions don't allow them that luxury. It's usually due to an inability to provide adequate proof of RIN validity, where QAP can help, weaker balance sheets that somewhere a marketer or a QAP can help, along with the established reputation. And their smaller production volumes, as I mentioned, can get in the way. That's one of the things that a marketer is also able to assist with, is an ability to aggregate the RINs and deliver the bulk volume. And then their constant need for cash flow, forcing them to take other alternatives and options out in the marketplace. Just like the scenario where the producer sends the RINs along with the wet gallons, producers might view this as the safest way to lock in margin. And then, you know, it could be seen as forfeiting profit potential and an opportunity cost. and I saved my favorite option for last. You can actually use a marketer. That's what we do, and what we basically serve is the role of a partner that wishes to help the producer succeed, has the resources to make it happen, and make sure that its customers downstream are protected too. In most cases, utilizing the vast resources and flexibility provided by an experienced and seasoned RIN marketer are going to be the most mutually beneficial arrangements that you might explore. With the team and the network that a marketer can usually put at your disposal, they can help you build compliance strategies to maximize and stable your RIN values. One example of that is one of our exclusive suppliers of advanced RINs went from a forecasted annual capacity this year of 1/4 permitted capacity all the way up to full capacity based on strategically marketed RIN sales alone. Part of that is because of basically the tools that a marketer uses, and those are key relationships, premiums for validated RINs and for bulk volumes, compliance solutions for separation and aggregation, the ability to meet cash flow, to make cash flow meet your needs on a rateable basis, and the flexibility with regard to pricing structures, whether they be forward, indexed, other negotiated structures, contract terms, and sales strategies. These all work together to create an ongoing relationship that encourages teamwork. And a lot of these tools are accessible through the marketer, but also through the relationships and the network provided by your marketer. Where a good marketer sees weaknesses in its own abilities or in its partner's abilities and wherewithal, it should seek out synergies and efficiencies with those that are best able to tend to those specific needs. And that brings us to QAP. Merex's reputation and position as the leading quality RIN marketer is largely due to its efforts, ongoing efforts to protect its customers and their need to acquire valid and assured RINs for compliance, and also to protect its suppliers from making costly errors or mistakes that could invalidate their RINs. That said, a dependable and loyal RIN marketing program is only one of the most valuable resources, and a QAP would be another that would help them maximize and stabilize their RIN values. A competent and capable QAP provider works directly with the EPA every day to ensure that everything the producer is doing is right, it's in line with the intent of the regs, and you don't run into any issues with validity when it comes to your RINs. For Merex, there's no real question here to QAP or not QAP. It's a rhetorical question. We already have a number of end customers who are now demanding QAP verified RINs in their contracts as a part of their risk management portfolios and to relieve the liability involved with invalid RINs. And so you really have to decide what QAP is right for you. Just like with a good and reputable RIN marketer, the right QAP provides fees that are transparent, they're forthright, they keep them to a minimum, and they provide the peace of mind and assurance, which are obviously priceless. Often additional services are offered as a part of a total package and not as a means to nickel and dime producers with hidden fees or add-on costs, or the obligated parties too. I'd really say that above all, competence and ability are key. So, I mean, really there is a formula for success, and it's basically a vast network of relationships, marketing, partnerships. All of these work together to maximize and stabilize your RIN values in an increasingly volatile market. It's pretty difficult not to capture every opportunity, or pretty close to all of them, with an entire team working on your behalf. So if you have any questions later, feel free to contact me, and thanks so much for taking your time to listen today. Wayne?
Thank you, Jennifer. So if I am a producer, what I've heard from you, if I'm a producer and I say,
Wayne?
Jennifer, yes.
Hello? Jennifer?
Yes.
Sorry, I had it on speakerphone. If I'm a producer and I say to you, tell me why I would want to use a QAP program, what you've told me back is because, one, the buyer demands it maybe. 2, because it lessens your liability, and 3, because it gives you assurances as to the product and to the RINs. That's how you're seeing it from Merex's side to some degree. Susan, why would I want to use the QAP program from Genscape's perspective?
Well, I think just to briefly summarize here, I think that there are 3 reasons. There was the economics of it, the counterparty requirement, and basically to create more liquidity in the market. I think that what we've seen is that there have been an increasing number of counterparty agreements that are requiring either QAP A or B. And for those obligated parties that are still on the fence, they are taking measures such as a QAP readiness type survey to see what producers have done for compliance in 2013 and to create their strategies for 2014. So we are seeing an increasing adoption. We've also seen about a 30% increase in the number of clients in the past couple of months. So in terms of renewable fuel producers, so that's definitely telling us that there's definitely more industry adoption and impetus. The other, the economics are the most compelling thing right now. I think that we've seen a producer basically that went to the market with that used our flexible program, went to the market with A RINs versus B RINs, and saw a 5-cent spread in terms of what they were offered to positive for the A RINs. So I think that also just being able to get kind of an unheard of long-term fixed price deal over the course of months, or even an index type deal over the course of months, has been very successful for our QAP clients, especially those getting QAPA. So I think those are the big reasons why I think we've seen QAP be successful for the renewable fuel producer. And I think on the marketer and obligated party side, we've definitely seen some liquidity open up and have seen less risk in being able to take RINs from producers that maybe they couldn't take before because it required a lot more risk management and going through treasury departments and things like that. So some of that process is now fast-tracked for those obligated parties, which helps them open up their market. So I would say that those are the two of the big reasons. The 2 out of the 3 I mentioned are the economics and definitely the compulsion to do it by your counterparty.
Okay. So now I want to sort of put, and we're at our hour, but I'm going to take just a few more minutes if everybody's got it, just to make sure we can give everybody the information they need. Jennifer, I'm going to put you on the spot a little bit and say, from Merex's perspective, short and sweet, why Genscape's program? And then Susan, I'm going to say from your perspective, from Genscape's perspective, why Merex for marketing? So Jennifer, why? From Merex's perspective, why Genscape's QAP program?
Well, our experience with actually putting together the due diligence package that we did in the past, and then our conversation with the EPA on potential QAP solutions, really led us to the conclusion that while our program was incredibly rigorous, it was probably midpoint between B and A QAPs. Our core competency is marketing and pulling the resources together for our providers and our suppliers. We had to do the research to make sure that we were doing what was right for our producers and for our customers. And we came to the conclusion during that systematic approach that information collection, analysis, state-of-the-art monitoring technology, these are all Genscape's areas of expertise. They've been doing this forever. And we here at Merex consider ourselves, every day we consider ourselves fortunate that we found them. We decided to use them to put all of our advanced RIN supply under a QAPA program. And we did discover during our research that there were very few providers who will provide QAPA services. Some of them provide B, and some of them provide QAPA and QAPB like Genscape. But the resources required for QAPA are quite onerous, and we feel very confident in saying that nobody can do it like Genscape. We work together every day to provide a sense of security to our customers and to our producers, and we know that everything is being done right. We can sleep at night, and part of this is because Genscape really does care so much about the integrity of the RINs going through their program. I mean, they have a stake in it too. as a result, part of their program is ongoing RIN education, compliance assistance. These things are folded in to help make sure everything is done right every single time. And we've even had a few suppliers benefit from expedited results due to their continuous and dialogue and relationship with the EPA. So I think that it's benefited the industry as a whole to have QAP providers, especially like Genscape, who can help the EPA with some of their difficult decision-making processes.
Okay, thanks. And I'm going to give everybody, in just a second here, I'm going to give everybody a few concluding remarks how to get a copy of this webinar if you want to listen to it later on. Also, real briefly, Susan, why Merex from Genscape's perspective?
Well, I think, you know, Genscape obviously is very conservative about our independence in the marketplace, and so, you know, we're out there looking in the marketplace for, you know, a partner to be able to help provide our producers with options to market their RINs. And I think that, you know, there were several things that stood out about Merex and really cemented that, you know, desire to work together with producers in the marketplace. I think, you know, the first thing is that they are a pretty massive company with their annualized revenues, and I think that they are a very trading-focused company. They've been around for a long time, and I think that, you know, the second big thing is they've developed very strong positive relationships with downstream partners across the board in the marketplace. And it's not just in biofuels, but also crude and chemicals and the other things that they do. I think that, you know, they are really have worked hard to keep those relationships very positive and to keep very strong relationships there. So, you know, they could work really hard on behalf of both sides of the people they serve, both the suppliers and the buyers. So they really work hard to be partners with the plants and really go over and above the call of duty. You know, and they're not just traders, but also partners in helping to find strategic solutions. You know, we've had a couple of instances with producers that are our clients that have also become clients of Merex, and, you know, one of the things they've really helped them out with is cash flow instead of having to kind of scratch and claw, you know, from month to month trying to sell RINs and generate cash flow. They have a lot more stability now and are able to maximize value of the RINs consistently. So, you know, I think that they really help their partners hedge their risk in a volatile market. They, you know, with a fixed price customer contract or even maintaining flexibility for those that would rather, you know, have indexed or shorter term customer contracts. So they're always trying to out there getting the best prices, and I think that they're one of the only parties in the industry that will engage in multi-year contracts. And so all this has really helped our client base, and you know, is really the reason why we're happy to have a partner in Merex.
Okay, good. Thanks. I appreciate that. Jennifer, I'm going to give you 2 minutes for concluding remarks, and then I'm going to give Susan 2 minutes for concluding remarks, and then I'm going to take 1 minute, and we're going to be done. So, Jennifer, concluding remarks.
Thanks, Wayne. I actually did want to thank you really quickly about the opportunity to present here today. We really appreciate it. This level of professional courtesy and networking are only a part of what we've come to expect and enjoy as a result of our alliance with Lee Enterprises. We've been able to send requests through the group for services that our producer partners didn't even know where to begin looking. Lee Enterprises is a vast and limitless network, and we have been very fortunate to have developed our partnership with you. Also with a number of other members of the group, like Genscape and Susan here, and then Christensen and Associates, which is actually one of the 2 accounting firms Wayne mentioned earlier that are utilized by Lee Enterprises. I want to thank everybody for your time today. Really do appreciate it. I hope that we were able to provide you with some valuable information, and please reach out to us if you have any questions.
Thank you, Jennifer. Thank you for the kind words. Susan?
Thanks, Wayne. I just want to say that we really appreciate everyone attending today for the webinar. It's great to have people from different segments of the industry come together like this, and for us to be able to have conversations about, you know, topical issues, regulatory, and how the market is going. So I want to thanks again to Wayne. You know, our partnership with Lee Enterprises has brought us a lot of success as well, from referrals to also when, you know, we're one part of the industry in terms of trying to help with market transparency and providing integrity services. But being able to network with Wayne and be part of the group allows us to access a very tight-knit group of consultants that have expertise in really everything in biofuels. So from feedstock supply to insurance to safety and those sorts of things, you know, our clients now have immediate and ready access to very cost-effective and immediate solutions to things outside of QAP and marketing. So, you know, that's really a great part of being part of the Lee Enterprises network. So, and being able to put on webinars like this where you can have multifaceted points of expertise delivered in one place. So, I just wanted to let everybody know we got several questions during the webinar. We certainly appreciate your questions out of respect for everyone's time. What we're going to do is respond to those questions with an email following up after the webinar. Also, you'll see after the webinar there's a brief 3-question survey that just allows a channel to give you your feedback so we can make these better. If you don't mind to answer those questions, we would certainly appreciate it. Thanks, Wayne.
Okay, thank you, Susan. And this will conclude the webinar. If you have further questions or you need further information, please feel free to contact me personally. Like Susan said, we will get your questions answered. I'm sorry we ran a little bit over time-wise. Again, if you need to contact me, my phone number is 501-833-8511. If I can't answer your question, I will get it to the right people. This webinar is recorded, so if you want a copy of it or you want to hear it, you can probably go to our website, and it'll be linked on there at lee-enterprises.com. So with that, I appreciate everybody, and we will sign off. Thanks to everybody for your attendance.